Welcome to Let's Talk Tax, the show for growth-minded CPAs and real estate professionals navigating the ever-changing world of tax. I'm your host, TJ Sponsel. In today's episode, we're going to take a closer look at the manufacturing sector, a space that has evolved dramatically since COVID and continues to shape the U.S. economy. Joining me today is my colleague, Justin Gephart, shareholder here at McGuire Sponsel. Let's dive in. Welcome, Justin.
TJ, thank you. I think in year two, this might be the first time we've dusted it off between us.
I think that I was thinking the same thing. I think it's the first time. Obviously, Meg and Kelsey don't trust us together too often.
I tell you what, we may be the best dressed people, though.
Oh, well, don't tell Tim Masters. He takes a lot of pride in that. So, no, all seriousness, everyone, thank you for joining us today. And this is kind of a much more broad subject than we traditionally talk. I think Let's Talk Tax, we kind of narrow on one specific practice line or one specific tax planning tool and try to educate or at least remind our listeners on some tips or some triggers that to be mindful of. But today we're going to try to unpack manufacturing.
Yeah. Well, TJ, one thing I wanted to hit on with you immediately, the beauty of what we do, we get to go out and visit hundreds and thousands of clients out there. Mm-hmm. So as you've had a lot of experience interacting with manufacturing clients in the past, what are some of the pain points you're hearing right now within the manufacturing industry?
Well, I think it's changed a little bit. It's changed a little bit over 2025, just with President Trump being elected and the introduction of tariffs, obviously through July until July, tax uncertainties. So I think tariffs definitely put some pressure on, or just because it's uncertain. What's this mean? When's it going to get fixed? Mm-hmm. Is it going to get fixed? Obviously, the supply chain issues that those cause. When I say supply chain issues, just the available inventory as well as the cost of the inventory. How they're dealing, are they going to absorb those increased costs? Are they going to pass it on to their customers? What's the customer's appetites for that? But I think also it's just looking at the problems they've had for a long, long time. I think there's obviously COVID introduced certain challenges to them, and now that we're 5 years past COVID, they've learned to kind of build that into their business. But there's so many things that manufacturers still face that they faced when I got in this business 20 plus years ago, is that cash flow, managing cash flow. That's still the struggle they have. And how do you manage that? Whether it's dealing with supply chain, whether it's dealing with ongoing workforce issues, whether it's cost, how to pass through costs down to the customers. And ultimately, there's so many times when it comes to tax planning, they think pretty reactively, meaning at the end of the year, let's go buy a piece of equipment so I can get this massive deduction for the year and save my taxes. Well, through working with the hundreds of CPA firms that we have worked with over the years, there's much more dynamic, recurring methods that they can, or tools they can employ that are going to bring them long-standing value that's going to create a tremendous amount of cash flow flexibility for them going forward.
Yeah, I think anytime there's a challenge, the key is how proactive are you being with the challenge, because there's typically opportunity when you encounter one of these challenges. And I think that's something we've heard with our CPA firms over the last couple of years, where maybe the workforce hasn't been as high and more work has been on the partner's plate. It limits their ability to potentially get out and interact with the client on site and proactively serve them. So I know those are a couple of the things we're going to talk about today. But as you look at it, you mentioned over the past 5 years, some of the challenges that have happened, and it's really created a lot of opportunity. You talk about tariffs. I look at it from a location advisory standpoint. The tariffs are causing companies to reconsider reshoring their activities back here in the States. Our LAS team has been busy fielding those calls. Hey, what's it going to look like for us to bring this, the manufacturing facility back into the United States, and what opportunities do we have with that?
Absolutely. And that's where I think it's exciting to be part of those conversations early. As we know, we've talked many times on this platform, is that, when those conversations start happening, we need to talk about incentives and help point companies to the right areas that are going to maximize the credits, the grants that are available, the assistance that they need to make those investments. But also it brings into play our global business practice in terms of having the conversations. Are you structured properly? Mm-hmm. Okay, I think that's obviously we do a lot of that. You've heard just horror stories of companies going into a new jurisdiction and leaning maybe too heavily on the attorneys and not consulting the CPAs as regarding what's the best from a tax position, how to structure that entity, and it's really caused a lot of turmoil for them. You also have transfer pricing. I think some people look at transfer pricing studies as this massive just compliance. It's just this weight they got to carry around. Well, in fact, if we could look at all your global activity, okay, with the goal of using a transfer pricing study to lower your overall global tax rate, it unlocks more cash flow. Obviously, that's a very large conversation, but it's something to change the mindset. Instead of tax planning being something that's done reactively, it's done proactively. You and I have been in a lot of meetings over the years where we're sitting down with a CPA and their client. Maybe it's a new client at the CPA firm, and we're just talking basics, cost segregation, R&D, maybe an IC disc. And these manufacturers they're blown away because at the end of the day, there's a lot of stale CPA client relationships out there.
Yeah.
And that's not because people are lazy. It's because we're busy. I mean, our industry, the CPA industry, we got massive employment or workforce issues in terms of not enough people coming into the industry. And so people are dealing with more and more work, more deadlines, and it's just not able to get out there and have the necessary planning conversations with their clients. And manufacturers are dealing with a lot of challenges themselves, the same type of challenges in trying to find people. But sitting down and saying, listen, let's look at your existing business and not going out and buying that piece of equipment, but what is inside your business right here, inside the walls of your shop, your manufacturing plant that can save you money. I think of utility tax exemptions, property tax, just managing those, being aware of all the planning options that are available to them unlocks that and increases the cash flow through effective tax planning.
Well, and I think one thing you're hitting on there is that advisory mindset. And that's something from a CPA perspective because they are so busy. Where the industry is going, it's a hot topic right now with AI. And AI replacing a lot of that compliance piece that accounting firms are so used to in terms of the revenue piece. How do you shift what you're doing from a day-to-day perspective from the compliance to the advisory to the consulting side? And it's about helping these manufacturing clients save money down the road. Where are those areas that we're going to be able to make an impact? How are we thinking outside the box just from tax prep and being more proactive throughout the year? I've a couple of my closest relationships, we kind of just do a tour of their largest clients. We spend 3-4 hours in their shops just talking business, figuring out what are their pain points, and our ears are open to say, how else can we help them? How can we think outside the box than what most of the CPAs are used to thinking about?
Well, I think, and that's wise that you're doing that. It's great that we do that. But I think it's helping our profession understand and equipping their staff, seniors and manager levels to identify those opportunities. We've seen a lot of traction within our alliance network when they're empowering managers, seniors, and staff people to look out for those opportunities. I think of our checklist. Your checklist that staff or senior and manager can look through there and say, okay, what are my clients doing here? Are they taking that? Are they have an IC disc? Are they taking the R&D credit? Let's look at their depreciation schedule. Is their annual property tax bill over $50,000? And that's something I think that we try to help our alliance firms with, because if you're a 20 partner firm and you're just counting on those 20 partners to identify the opportunities, guess what? Not everything's going to be identified. Okay, but yet if we can help equip CPAs to empower their younger generations to say, here are all these planning tools, here are the triggers, and by the way, we can either introduce them ourselves, being the CPA, or bring in a firm like McGuire Sponsel, say, hey, help my client address this issue. Property taxes are something we really never considered. I think that's a key to bringing more value to manufacturers, is the empowerment of the entire firm to serve that client.
Yep. As you look at the current environment with what's going on, again, the tariff situation, how does that impact the revenue? How does it impact supply? What are some of the other areas? I think let's spend a few minutes peeling back some of the opportunities from a planning discussion, especially as we're entering Q4 tax planning season. We'll start off with, I'll cover location advisory here. If you have clients that are looking at reshoring activities, are they adding jobs? You mentioned buying equipment earlier. Equipment's a good trigger for that. Are we having those discussions? Property tax side, if we see that they are buying new equipment, have we checked the value of the old equipment that they're using? Have they retired it? Are there ghost assets? Is there a drop in income as a result of some of the tariff discussions? Those are some of those items that I see from our perspective that are great talking points. Qualified production property is another one that we haven't hit on yet. And that's, you talk about manufacturing coming back into the States, that's a significant planning opportunity, including the 100% bonus appreciation. So how are we going to utilize that? How are we proactively going to plan and strategize of how to set that client up for the best route forward?
Well, I think you mentioned AI earlier in our industry. Well, we're not the only ones using AI. Is that the IRS is going to start using AI and using technologies, and I think we also got to make sure we're reducing exposure for clients as well. And when I go into manufacturers, it's not just looking out for the planning opportunities, it's also looking at and making sure we're protecting them and we're reducing exposure wherever we can. A couple things that pop really for a manufacturer standpoint is the R&D credit right now. The R&D credit's been around for a long, long time. Okay, it's heavily marketed. It's one of the grayest areas of tax law. But also the IRS is requiring greater compliance now than they ever have. So if you have that client that maybe had an R&D study done by an expert 10 years ago, and they've been taking the Sally approach, same as last year, well, things are not going to change for 25. And we've got to help educate them. Now, the good news is some people go, oh, that's compliance, great. I'm just going to pay more engagement fees. Well, what we find is that when you have a client that's been self-performing their R&D calculation and we can come and take a fresh look, we can find more because their business has evolved. There's also court cases that have come out over the past 10 years that give us even greater guidance on how we build a claim. So this whole issue with the R&D credit in Section G is we've got to put more documentation on the tax form than we ever have before. Now, it's not just qualified wages, qualified supplies, contract research, and put it on the 67, 65. Now there's schedules that we got to be able to help. Well, that's something we can advise manufacturers on. It was just one in Cleveland 2 weeks ago. They've been on the Sally approach for the past 13 years. We walked in and they were like, oh, I didn't realize I could include this. Oh, I can't, now I can include this. Well, so the conversation started because the CPA firm was a little worried about Section G and the additional filing requirements. Well, now the client realizes that, well, I've had a pretty stale approach to this. IC disc. When we started our IC disc practice back in the early 2010s, it was 20% tax arbitrage. Well, now it's not that anymore, but it's still a really valuable tax planning tool. Now, unfortunately, we can't go back and post date, but you may have a client that we've just been doing the 4% of export sales year over year over year because the CPA was easy. The client really didn't want to spend too much money on it. Well, if you come in and look at transaction by transaction, Justin, that can be 2.5 times more commission than they saved. Once again, we're not setting up a new strategy. We're looking at what they already do, but with a fresh set of glasses, and coming up and generating additional savings.
You mentioned the IRS piece, and specifically still kind of staying within that global perspective. The compliance side on international tax returns, 5471s, 5472s. Tremendous opportunity there. And I think so often what we hear is that it's truly compliance, but how are you utilizing that compliance to potentially consult, to look at how do we turn this compliance piece into a tax planning conversation? Are there changes in the entity structure that we could go after? From planning mechanism, again, from an IRS perspective, they're starting to turn up the pressure on a lot of this on the reporting side. And I don't ever like selling by fear, but along with that increased exposure, the fines, the penalties are pretty large from that perspective. So are we doing our jobs in terms of consulting and advisors as telling those clients that maybe haven't done a transfer pricing study in the past that really should do that now?
And bust through the myths associated with that, Justin, is that, you sit there and go, okay, well, I thought a transfer pricing study was 50, 70, 80 grand. And there's some that are, okay, but there are some that aren't. There's some that are $10,000, $11,000, $12,000. It's actually sometimes less than the fines that would be available. Now, we don't want to sell through fear, but it's counseling and educating our clients, or assisting our firms in educating their clients on, okay, here's the access you have to this knowledge and this resource and this solution.
Yeah. I was out doing a site tour for a large manufacturer in northern Indiana, and we were looking at specifically from a property tax perspective. They've been going through and getting about a 10% reduction year over year. Well, we go up there, we tour the property, and we look at how run down the facility is. It's just it's heavy manufacturing. There's dents, there's holes everywhere. Well, that's a planning opportunity, and that's where I go back to: do we have the time to go and walk and spend time with the client on site? If we can increase that amount of presence with those clients, you're going to find all types of savings. So you look at that specific client, we're able to take them from a 10% reduction to almost a 35% reduction.
Sure.
All because we were on site identifying all these areas.
Justin, I can think of dozens of examples just like that. I remember walking through a facility in Iowa years ago, and there was a pallet that was been shrink wrapped in a big orange label that said Brazil on it. And I looked at the plant manager. I'm like, I'm guessing that's not going to Brazil, Indiana. And he goes, no, that's going to Brazil. And so I got in my car and driving back to Indianapolis, and I called the CPA and I said, have you ever had a client? Does the client have a disc set up? Long story short, we had the disc set up the next 24 hours. It's that walking around the facility, whether on a cost segregation, whether on a utility tax exemption, there's all kinds of things that we can really highlight to say, have you thought about that? I mean, R&D study, you walk by the QA lab of an automotive supplier, and I walked by and the clients have been doing their own calculation. The CPA has been doing their own calculation. And I said, so how are you factoring in the QA into your annual tax credit study? And they're like, well, we don't. I'm like, well, isn't everything PPAP?
Mm-hmm.
And as obviously the final phase of development. And they're like, well yeah, 2/3 of our work is PPAP. I said, well, it should be included. And I think so. Being on site is very, very valuable. Okay, and that goes back to kind of where I was saying a few minutes ago. If we can help our alliance firms, and firms can be aware of how to get their staff to identify opportunities or what's missing in the client's tax return, then that can be a trigger to say, okay, it's time to go out here and look at this facility.
Yeah. There's a lot of new age technology that can help serve clients better, but there is a little bit of going to old school.
Sure.
And investing in that relationship, getting back on site, sitting across the table from the client, talk and shop with them. Mm-hmm. I think that's where you find a lot of these tax planning opportunities. And it's just something that over the past few years, and I think that's starting to shift back to where there's enough labor force to help ease some of the partners' burden so they can get back out and visit with their clients. But sure. I think that's pivotal as we look at how do these CPA firms better serve the manufacturing industry.
So, Justin, if there is one action, I think you may be able to answer this, but let's just reinforce it as we close out today. What is one action CPAs can do to better serve their manufacturing clients?
I think you're taking a look at those clients and you're reaching out to schedule on-site meetings. So that way you can sit in their facility, hear what they're going through, look around, knowing all the different planning opportunities, what those triggers are, and you have your eyes on it. Because a lot of times those clients, they're so busy running their business, they're not thinking about that hole in the wall actually affects their property taxes. Yeah. They're running their business. So I think the more that our CPAs can get on site and start to look through those lenses and advise them, that's the immediate planning action I see.
Well, and you hit the nail on the head there, Justin, because I completely agree, is that we're in this every day. We wake up every morning, and we're nerds, okay? We wake up and think tax every day. But a manufacturer's not. They're thinking about, okay, making sure the lights are on, everybody got to work on time, what's our pipeline look like, how are we getting the product out the door, all those things. They're not thinking tax. Yeah. So we need to as service providers, we need to be very intentional about reaching out to them and having those conversations and inspiring them enough to say, hey, I don't need all your time. I need a little bit of your time.
I promise that's going to be worth it too.
Exactly. Thanks, Justin, so much for today.
Absolutely.
I've enjoyed this. That wraps up today's conversation on tax planning for manufacturers. A big thank you to Justin for sharing his insights and perspective on how the industry has changed and where CPAs can step up as strategic partners. As we discussed, manufacturing clients face unique challenges, but within those challenges are tremendous opportunities. By leaning into proactive planning, whether it's depreciation strategies, R&D tax credits, inventory planning, CPAs can help manufacturing clients not just survive, but thrive into 2025 and beyond. If you'd like to learn more or connect with our team, visit McGuireSponsel.com or reach out directly. As always, thank you for tuning in to Let's Talk Tax. Take care.